I'd like to welcome all of my guests. In the next half an hour, we're going to be talking about the direction of technology, what consumers are wanting, what technology is hot, how much collaboration there is going on, whether technology companies can afford to adhere to different rules from other more traditional companies in terms of their finances, and then what is the world going to look like in 10 years' time. So we've got 30 minutes, so I better stop talking and start getting the guests talking. Let me introduce our panelists. You've already met Rajeev from Softbank here. The stage was his, I feel, before I joined it. Jean Liu, who in the middle there from Didi. Dennis Johnson, right at the end, welcome to you, who is the Chief Strategy Officer of the Public Investment Fund, KSA. And Ritesh Agarwal, who is the CEO of OYO Hotels. I should have said that Jean is the president of Didi as well. I should have said that. Apologies. So I'm going to start off, if I may, with you, just because your voice is warmed up. Let's talk about how we see the world as it is. Where are we in this technology revolution, and how far is it going to take consumers and the world? It's a very broad question, but if you could give me some sort of examples, that would be helpful.
Well, it's a very broad question. As I stated a few minutes ago, technology disruption. If you look at, let me give you a few parameters. If you look at the disruption of, I mean, people forget, in 2007, there were no smartphones, 11 years ago. The Apple iPhone came out in 2007 first, went international in 2008, and that moved computing from your desktop to your palm, and actually led to all these other revolutions that we have seen, whether it's Didi, OYO, what have you, when computing moved from your desktop to, you had the geolocator, you could know where you're going, you could calculate everything. So it has been fast, but it'll be much more rapid over the next 5 years. I mean, the internet started in the late 90s, 98, 99, really caught on in the early 2000s, so 20 years. And that's kind of a mature business now. You have, out of the 7 billion people on this planet, most probably 5 are already connected to the net. India was the last big one with geo and the falling cost of data and falling cost of mobility. We had 1 billion people roughly come in and get access to the net in India. And what's left is a big part of Africa, and that's pretty much it. So my prediction is that what took 20 years, mobility took 10 years, the next technology disruption will take 5 years. So it'll be a lot more squeezed and a lot more rapid, where a whole swath of industries, and 2 examples here, will get disrupted.
Okay, Dennis, let's come to you as well. Would you agree with that timeline? Almost that the pace of disruption, I'm going to use that word, the pace of disruption is hotting up.
Tanya, PIF is an enabler of Vision 2030. And as a result, we have to identify, monitor, and forecast mega trends that will influence the global economy as well as the environment for investing. And therefore, our analysis shows that technology has and will continue over the long term to have a very, very positive impact on the global economy and on the environment for investing. As a result, PIF has developed strategic partnerships with Softbank Vision Fund. We're making direct investments in leading-edge technology companies around the world. We're committing capital to funds, private equity funds, that are focusing on investing in companies with leading-edge technology. We are committing capital to our local portfolio companies that are engaged in the development of leading technology. And locally, our team is also, PIF's team is also working with our portfolio companies to develop digital strategies, which we believe will be critical to their success. As PIF moves forward to execute on its technology investment strategy, we'll do so with the continued focus on the areas to date, but in addition, we'll focus our priorities on artificial intelligence, technology supporting smart cities, technology supporting the improvement in the quality and the delivery of healthcare, and cybersecurity. So yes, we believe long-term the trends in development and technology are very positive for the investment environment, and that will contribute to PIF as an enabler of Vision 2030.
Right, so a lot further to go. Jean, if I can, I'll just come to you first, if I may. Just a sentence or two about what Didi does, and also where you see the power of technology. Do you think this pace is going to increase, and what does that mean for your business?
Sure. For Didi, our mission is just very simple, to help people to commute better. And I think that's what technology do for our generation as well, which is to empower each individual to enjoy a high quality life, although the resource is getting more and more limited. And as you can see, in the old days, people have to get around using your own car or taxi or bus or train. But in China, we have 1.4 billion people, but only 200 million cars. So technology kicks in to match supply and demand in a much more efficient way, using predictive algorithm, AI system, etc., etc.
And the trend that underpins that is urbanization.
Yes,
Yeah,
yes,
very
definitely. With the trend of urbanization, technology help in many ways how to get transportation safer, more affordable, and I'm sure Ritesh has a lot of story to talk about how to
Ritesh,
travel
let's come
better
to you
and
now.
live better.
What is the trend that underpins what it is you're trying to do? Just explain about OYO, if you would.
Sure. I think I'll begin by just giving a quick background about our company. Rajeev explained very generously some part of it. We manage worldwide a little over 46,000 hotels between India, China, Europe, United States, Middle East, and a few geographies. In this, I think what we've been able to see is, and the whole perspective behind consumer-led supply creation is a positive trend that we are seeing worldwide. What that means is, on one side, there were hundreds of millions of retired, not so good quality hotels, which had static prices through the year.
Yes.
Not much demand for that. On the other hand, well-designed, dynamically priced hotels, occupancy goes up from 25% to 75%. That's a fundamental shift that we've seen. Speaking about AI, for instance, that Rajeev was talking about, we've used AI to sort of predict what interior design gives us the best RevPAR by CapEx ratio. RevPAR is just what price or the return.
What interior design, interestingly?
Yes. So for
What's the
instance,
answer to that question?
So for instance, you could potentially predict that having a Marilyn Monroe portrait could give you a 12% jump
What
in.
portrait?
A Marilyn Monroe
Okay.
portrait.
Marilyn Monroe, okay.
Yeah, you could get a 12% jump in RevPAR. Something as straightforward, like something like that would not come with human beings predicting what kind of design should be there. That would only come if the systems are constantly looking at trends and saying that, well, if you have portraits like these, the hotels look like they're boutique, so customers are willing to pay probably 10% higher.
Boutique meaning there's an individual nature to it. So customers like to feel that what they're getting is very individual.
Yes, yes. And the perspective behind that is saying that consumers being the heart of every decision rather than supply being the heart of every decision is extremely important. Yes. And technologies like ours and Didi's and others can constantly predict what allows consumers to get excited and want to purchase the products that we're all serving.
So Rajeev, would you agree with that, that something that allows the consumer to personalize their experience in some way or what they're getting or to enable them is really the heart of this revolution?
Absolutely. And it goes beyond that. I mean, if you look at Didi or OYO, which is what we are discussing right now, you can summarize the impact of AI on a very simple term called heat maps, which is demand maps, where they have enough data now. Didi is doing 23 million rides a day. That's the last number. He has 50,000, close to 50,000 hotels. So they have the data now. Over time, they'll have more data to be able to predict the demand based on weather. On Friday, 2 months from now, what will be the demand for a car? What will be the demand for a hotel in Paddington in London? And be able to price it accordingly. Price it down, price it up, if there is not enough occupancy. And that is the key of data science.
Right, so that is what you refer to as being dynamic pricing.
Yeah.
Dennis, I'm going to come back to you and throw you a slightly curved ball, because I know you like it that way. When we talk about economics and we talk about the UK, I'm from the UK, we the theme that we come back to a lot is productivity. When people, I like to say, when I was a banker and when we used to invest, we'd look a lot at this, whether something would improve productivity. Productivity in the UK, anyway, and not just in the UK, has been fairly static. So that seems to me that it's not an important part of when you look at something to invest. Is that fair?
One of the important pillars for a PIF is to have strategic partnerships and to be the strategic partner of choice globally. As I indicated, we're very fortunate to have a strategic partnership with the Softbank Vision Fund. And this partnership has given us access to some of the fastest growing and most innovative technology companies in the world. I would note that the McKinsey published a study last year that indicated artificial intelligence over the next 10 years should improve productivity globally by 1.2% per year. And so we believe, again, through the access of the exposure to innovative companies through the Softbank Vision Fund, that we'll position ourselves in our investments to benefit from some of the productivity gains that will come from leading-edge technologies like artificial intelligence.
So productivity isn't an old word, it is something that you all think about, is it? Very much so, okay. Let's come back to other words that we may want to come back to, which seem sometimes a little bit outdated, like profitability, like borrowings, leverage, those types of things. When we see technology companies in the press, and speaking as somebody who works in the press, you're always playing into a theme, and the theme for somebody of my age is the technology bubble that we saw developing in the 90s, right? So during that culture, there was a sense of, burn rates, that you had to get eyeballs, that you had to expand as quickly as possible. And when we see things like WeWork popping up in the press, that means that people worry that actually that technology expansion culture is still with us. So I'm going to turn, if I may, first to Rajeev and ask that question. What is the culture behind investing in technology companies now? What are the metrics? What is the discipline?
Well, that question had to be for me.
It was coincidence I came to you first.
So, look, the end of the day, the business has to make sense. Unit economics has to make sense. If you look at both these companies, and we can talk about any of our 85 companies in our portfolio, you have to first make the business work in a certain town, in a certain country, and that's what OYO and Didi are doing. I mean, before you go out, whether it's OYO, they went out and spread themselves one town at a time, Delhi first, India second, China third, Didi same, get China right, get the unit economics right, get the technology right, go deep into a certain segment rather than spread out like spreading your limited resources. Limited resources, because every company has limited resources, whether it's financial, human capital, what have you, too much across without testing out that the model works. Because you will make mistakes as the model changes. Both these companies made many mistakes. You learn from the mistakes, you fix the model, and then you move it and customize it somewhere else.
Ritesh, would you agree with that what you want to see is a company, yes, that has a good concept, but that has developed it in one market first before they move on? And when I come to you, and Jean, and ask the same question of you, Jean, I also want to know what some of these mistakes are that you've made. Ritesh.
Sure, I think, sorry, I got my way too close. But coming back, I think from our perspective, I have always said that at OYO we believe in a principle that is patiently restless, which means that when you haven't figured out how something works at a unit level to replicate it, be happy and patient, because you could wait and figure it out. So in 2016, we actually grew only 60%, whereas last year we grew 4 times, because then we were fixing and figuring out how the business works, which is what Rajeev also mentioned a little while back. But once we figured how it worked, then we were patient. Once we know how it works, every asset we open is going to put certain percentage of gross margin into the business. If we understand that, then it is value accretive and margin accretive to the company, and hence we should become restless and continue to execute. So I tend to agree with Rajeev's perspective, with a view of saying that just growing is not good enough. Growing right creates significantly more value, and that's what we've operated with.
Jean, would you agree that growing right, as Ritesh puts it, is the key?
Always, always. First of all, I think profitability is a very natural result of the user value you create. Right? And in China, we are very confident about it because it's a cheaper alternative to car ownership, more efficient and convenient, right? And back to the point to grow right, we have made mistakes, right? We didn't really understand the industry from the very beginning. We thought it's all about technology, and we're convicted technology will solve everything, but it's not. It's not just about technology. It's actually about service, and it's about humanity, right? So last year there were safety incidents happen on this platform, and we got waken up, and we understood. So this is not just about how technology can solve everything. You need to put safety standard, everything before growth, before profitability. So the whole company, we rethink about our business model, and we rethink about how we know we cannot eliminate crimes on the platform, but we know we have to try our best. So that's why in the other markets we are trying to enter, we make sure safety comes first, and we try to implement the safety standard in different markets and use our, the know-how and knowledge we have accumulated in China market when we go overseas. Yeah.
Dennis, just to come back to another theme, you mentioned the word collaboration early on. I think in a world where we are continually reading in the geopolitical sphere about less collaboration, less trade, people pulling back a bit, it might be easy to forget that technology companies actually are collaborating more. Why are they doing that, and how are they doing that?
Tanya, PIF is very focused on its strategic partnerships to give it access to, again, leading edge, rapid growth companies that will provide the important return requirements that PIF has. In addition, these strategic partnerships, again, with SoftBank as an example, also allows us to position some of these portfolio companies to look at investing in Saudi Arabia, which is also very important to us and important to PIF as an enabler of Vision 2030. So again, I think your question relates to one of the key pillars of PIF and why it's so important in terms of the access that we're able to get to, again, leading edge companies through strong partners that not only position us to earn the appropriate rate of return, but also allow us to contribute to foreign direct investment in Saudi Arabia.
Rajeev, would you agree that collaboration is increasing rather than decreasing?
In a big way. There are no barriers anymore. You could, in the digital world, you can virtually or not be anywhere. So collaboration is in two forms. Collaboration is one where the technology companies work with each other, and there are many examples where we have a company like Fair working with Uber, providing cars, or where we have OYO having dark kitchens in their hotels now, working with DoorDash, or Zomato in India delivering the food from their kitchens. And when you have in your portfolio 100 technology companies from every geography, the collaboration is they become clients of each other. Because the biggest cost for a technology company is customer acquisition and the customer data. I mean, that's the biggest cost for an early stage company, is the cost of acquiring a customer. And if you can work off each other to share your customers by forming synergies, that brings down that cost dramatically. And the second axis, as Dennis said, is to take our companies to new geographies, where most of these young companies, they're growing so rapidly, they're constrained by human capital, and as we mentioned, they're focused on getting their model right in a certain geography, a US company in the US. Getting them access to come to Saudi using PIF, using Sagia. We now have an office, the Vision Fund, with 5 or 6 staff in Riyadh. OYO has presence. Katera is building homes and delivering homes. They have 2 small factories in Saudi now. We just started discussion with Katera coming into Saudi perhaps 6 months ago, beginning of the year. They already got the mandate. They got an offtake contract from the housing department in Saudi. They've got a small factory in Mecca, and another one, I forget the name. They are going to deliver homes from November and build hundreds of small homes, employing local folks in Saudi. And we're doing the same. And Gene helped Ritesh quite a bit when Ritesh moved to China, January 2018, to start OYO Hotels in China. So a lot of mentoring also takes place between these companies, where, of course, if you're going into China, which OYO was venturing into China for an Indian company into China, got a lot of mentoring and help from Gene when he first entered China 2 years ago.
Aha. Ritesh and Jean, that's very interesting to hear that there appears to be a common culture throughout technology companies, that you are very happy to collaborate because of this business of customer acquisition. You're finding that too, are you, both of you?
Sure. I think I'll share a story which is related to FII. We met actually at FII when I showed Jean the first OYO hotel that was going to come up in Shenzhen. And in a month, her team helped us put together with the Shenzhen team of Didi. And if you open the Didi app, it would say in Chinese that, stay comfortably with OYO and ride comfortably with Didi. So that's how we acquired our first customers in our hotels and, got significant results. On the other hand, here in the kingdom, we've, of course, taken significant support through an MOU with PIF. And on top of that, we have, for example, in Mecca, this year during the Hajj program, we have worked with the Hajj Ministry. His Excellency, Dr. Benton, has supported us. And we audited close to 500,000 rooms there, down to the last line item, brought jobs to hundreds of young Saudi women to get the quality right without having to hire a lot of people. Or for instance, we worked with SCTH here with His Excellency leading the tourism department, His Excellency Al-Khatib. So our ability to partner with right from high-tech companies like DT to countries with the help of Vision Fund and PIF is something that we are very thankful for.
So just the data, how many hotel rooms and how many local employees do you have in the kingdom for Dennis to get happy?
Dennis would be quite happy to hear that now we run close to 9,000 rooms, 9 to 10,000 rooms here in the Kingdom of Saudi Arabia. If you drive around Riyadh, it's hard to miss an OYO hotel. Right in Ulayya, we have probably 7 to 8 hotels just in the middle of the city. We have brought employment to close to 3,000 people who are young local Saudis. And on top of that, there are 400 other people who have come in and been working with us. This is besides the 200 plus people in Mecca for our auditing project that we work with the Hajj Ministry for.
Congratulations and thank you.
Yeah.
Thank you.
Dennis, I think this highlights the fact that we're not just talking about new solutions for consumers, we're talking about new consumer markets too, aren't we?
Yes, we are. And again, PIF is an enabler of Vision 2030. And as a result, part of our mandate is to unlock value in different sectors throughout the Saudi economy. So again, through our strategic partnerships, through our local portfolio companies, we're working to accomplish that goal.
Okay, just briefly, a sentence from all of you. Dark kitchens, I'm going to start with that. What does that tell us? I'm fascinated by dark kitchens. It's one of my fascinations. They're starting in London, aren't they, Ritesh? Tell me about what that says about where we will be as a society in the future. How will that work?
Sure, I think I will connect this to efficiency and productivity.
Yeah.
When we find all of these hotels that we go and renovate and fix, we get something for free, which is the kitchen in the hotel. And these hotels are in great locations, like we're talking in the center of the city, around Paddington, Zone 1, and so on. Those are locations, if you want to go rent a restaurant, it's so expensive. But we get it for 0 additional rent because we already had it in our hotel. Now we use technology to be able to make sure we understand the efficiencies, the distribution, and so on and so forth, due to which today we already run close to 1,200 dark kitchens where people go get delivery from. But the additional investment for that is almost negligible because these are kitchens that are already existent in our hotels. So 10 years later, I believe companies will be very efficient and they will look at the consumers as well as the assets that they own or partner with, how they can get the best yield per square feet and yield per team member over time.
I mean, same thing happened with your high street retailers. You don't need a shop on Oxford Street. You don't need a top-end restaurant which has expensive real estate costs, which is the biggest cost, and fixed commitment for 10 years. All you need.
It's not a clever use of capacity.
What does the consumer want? Within 20 minutes, wants a food, and if they change their mind, 10 minutes later again, order something else.
Okay, Jean, let's come to you. This vision that we're talking about in the next 5 or 10 years, could you tell me something about the way you see society moving?
Maybe not 10 years, 20 years.
20 years, okay.
Yeah, I think, with rideshare, electric cars will be 100%, right? And it will be for sharing. It will be autonomous driving. So let's picture a city. There won't be parking lot inside of the city. All the parking lots, no need, right? All the cars parked outside of the cities and no traffic jam. The air will be cleaner and the sky will be bluer.
That's a very positive note to end on. I'd like to thank our panelists very much indeed. Thank you.
Thank you.